Hey, what's going on? Friday wrap-up time. Thanks for tuning in. It was Fed week. The Federal Reserve met for a couple of days and decided not to raise the Fed fund rate. There was a lot of investors that thought that they were going to or that they should. So a lot of upset people out in the markets. Basically, with this new Fed chair, the press conference, Kevin Warsh, he was talking about how they're going to take a wait-and-see approach. They just want to give it a little bit more time before they raise rates to stem the tide of inflation. Now, what's been happening the last couple of months is we've gotten a mixed bag. Uh, we've talked about the PPI and CPI and PCE, all the different inflation numbers, and they've been coming back, depending on the month, lower than expected, hotter than expected. So I think, again, just an educated guess, I think what they're doing is they're waiting to see kind of how the economy handles um, a little bit of hotter inflation this past month and how it's going to handle it going into the fall before they decide what they're going to do. Obviously, we have Iran and we've got the oil prices are up again. So I do like that they're a little bit cautious before pulling the trigger, unlike Jerome Powell, where he was much more reactive. And if you watch his videos, you know how I feel about him. I think he did a horrible job. So I'm grateful that Kevin's taking a more pragmatic approach to deciding what he wants to do. Now, as far as rates are concerned, it's not good news. They're still going in the wrong direction. This is the 10-year Treasury, 473 essentially. For context, February 27th, the Friday before we started bombing Iran, the 10-year Treasury was 3.93. Interest rates were starting to flirt with 5.99. So we got 80 basis points, basically, which is a pretty big swing to overcome before we can get back down into the fives. However, I would encourage you to not have these conversations with your client. Bottom line is this, that if they want to buy, now is a great time because we can still get them rates from 2, 3, 4 years ago. You know the strategies. If you don't know them, reach out to me. We'll go through them. But most of my deals now are coming back with seller credit. There are sellers out there that are motivated. Investors are still buying, which tells me that the smart people know that now is a good time to buy. So we've got to just continue to educate and show actual numbers. There's been a couple different conversations I've had this week where they flippantly blew off the idea, but when I started showing them numbers and how we can get there, the strategy, they're on board. They're more apt to take it more seriously, the idea of home ownership. So take that for what you will. We can talk more about it if you want. In the meantime, keep doing what you're doing. Don't forget about the non-QM loans that we have, portfolio loans. I've talked to some of you about this. There are a lot of self-employed buyers who don't think they can qualify because they write everything off. Send them my way, 1099 loans, bank statement loans, asset type loans, lots of things that we can do for those individuals that want to buy, but they don't think they can qualify. So we need to target those people. And that's what I'm doing. I'm getting into the community, talking to business owners, entrepreneurs, and just having the conversations to make people aware that these programs exist and that there is a way they can achieve the American dream of home ownership. If you got questions about those loans, about the strategies behind getting people buyers a better deal, reach out to me. Let me know. As usual, I'm always around. Have a great day.